Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, November 10th, 2009. Well, as we get into today's trading day, I want to show you some key technical things in the charts that are showing up. Part of them helped us get in a position yesterday, and we are in the money on that position. Again, that was posted to the Research Center subscribers on the hot charts and alerts yesterday, as well as to the chat room live for those of you that are part of the chat room. Now, a couple of things on that position. What was the key to us getting in that position? Why did we like that position? Part of it was the near fact that you hit the Great Wall of China. Now, those of you that have watched these free videos, obviously those of you that have been immersed in the Research Center, which is part of the premium subscriber service at the InTheMoneyStocks.com, you know that we've talked about that Great Wall of China as being an unbelievable level of resistance, and because we were able to short there originally at 109.68 to 110.34 and really accumulate all our shorts, and then when we fell back down to the 104 level, 103 level, unload those shorts, we've been able to wait patiently for that to be retested, and thus enabling us to go short a position, ultimately long an ETF, but it's short the market at that point again. And again, you can just see it's just rinse, repeat. There's so much money to be made across the board by utilizing these techniques of understanding the technical trend line analysis, price pattern, and time. It's an amazing thing because many people, let's say they shorted at 110 or 109, and ultimately they just thought the market would come down. Now it's right back there. If you didn't take anything off the table, if you didn't know the master level at 104, as we called, you're going to miss out on that opportunity, understanding that if the market retraces to reshort again and just do a rinse repeat cycle over and over again, maximizing profit. All right, net from 2 weeks ago, the market has basically moved 1%, but if you utilized it right, you should have been able to make 5, 10, 15%, depending on how many times the short ETF you were buying was, and utilize it and make that much money. Now, on a technical level, again, as I said, here's the upper Great Wall of China. This is the lower portion at 109.68. If you go a little bit higher, you're going to hit the upper wall of that Great Wall of China at 110.30 to 34. You can see as the market came right into that, it's just started to fall back down. We had a little fall. We called out this in the chat room as a beautiful in spirit of bear flag pattern. You can see how it played out beautifully. We got right below the 50 moving average there, but you never confirmed it. I want to reiterate that. See how the bear flag pattern played out beautifully there. Here's one bear flag. These 1, 2, 3 green candles inside of this bigger move down. That's what we call an in spirit of bear flag pattern. Sure enough, you can see it fall right here. You have another little bear flag pattern and fall down here. Once you get below the 50 moving average, you do not confirm it. What is confirmation? A secondary close below a breakdown point, signaling a resistance point, which would be the 50 then in play, and then move to the next point of interest, which would be this point at 108.75. Notice how you came down there and you didn't get a second close. You needed a second close below this low of the breakdown candle. You did not get that. Therefore, that tells you that the 50 moving average is still technically in play as a possible support line, and you may go back up there. Look at how the market traces all the way back up, and now we're just hovering on extremely light volume here. We have just done a little over 100 million on the SPY. We had called for this last Friday. We said in last Friday's video and last Thursday's video to our premium members, which is, by the way, that's all included in the Research Center. Everything listed in the Money Stocks under Research Center is included in the Research Center. Difference is you don't have the chat. The chat room is a separate service, as well as the webinar. And by the way, big webinar this weekend, folks. You want to get in on that. It's an emergency situation. The stuff that we've been able to call the Great Wall of China call, the price pattern timing analysis, divergences on the stochastics, MACD. This is all stuff we cover. It's very, very elite stuff that is not taught in a regular environment. You need to be on board. You can sign up for that webinar at In The Money Stocks under Education Webinars and Seminars. Please understand that that is something. If you're a trader and you don't do that, if you're a swing trader, you don't do it. If you're an investor and you don't do it, you're only hurting yourself. So I do encourage you to go do it and sign up and get that knowledge. It will increase profits, whether you're any type of trader or investor, by quite a bit. Now again, as you can see here, no confirmation, and that's something you got to know as well. You see the move up, a little bit of a bullish flag pattern here. Believe it or not, there's a little bit of a bullish flag pattern accumulating. Do you guys see how that works? You went up here, you closed outside of this inside red bar. That tells you that you have a possibility of a bull flag forming. Sure enough, you go sideways like that. That's telling you have a micro bull pattern. Now the negative to this is why you may not want to utilize that as a short play is because you have the 20 here and the 50 right here, and you only have a small amount of downside until you get to this support line. Do you guys see that? So the risk reward is not that great there, even though you do have a small little bullish pattern here. If you go up, you're going to have the 20, then this trend line, then this trend line. So there's a lot of trend lines of resistance, and part of the fact is we just don't have a lot of volatility in this market. Yesterday the market was up big, but look at how there was no whips in the market yesterday. Even today, considering what we used to have, you're having very small, minor moves. I mean, the spiders are down 33 cents right now. That's it. It's a very, very minor move down, basically flat on the market. So just keep that in mind for now, is that risk reward right now for a trader like me is not necessarily in the position to go long or short this market. All right, so keep that in mind. You can see still have a little bit of a bullish pattern. As long as you don't take out this low, that still would be slightly bullish. Again, the problem being, though, is you have the 50-20 blue line, green line, all as resistance points. So, I mean, what are you really going to get off? At any point, they could pull back off that move, and then you get stuck and you make 5 points or 5 cents or whatever on the spiders. And if you're buying like we do, 25,000 blocks, 10,000 blocks, it's okay. But in general, if you're buying 500 shares, it's not going to be worth it. In other words, based off commission and what gets taken out and fees and INET and Nasdaq and ARCA fees and so forth, all that stuff. But in any case, that's what's going on in the market today. We had a little bit of odds and ends out this morning in regards to a few comments. The dollar has strengthened. One of the key calls, guys, and these are more key calls that you need to understand that come out in the research center. If you're part of the research center, you're getting the golden goose or whatever you want to call it here. In addition, the chat room gets it too, but they get it live intraday. But overall, last night I went bearish on gold. Ultimately, again, from the high actually yesterday, bearish on gold. Gold is lower today. In addition, I went bearish on the USO or oil, and oil is down over $1 today. You got to just understand the technicals, and as long as you have the technicals, they will tell you what to do. We teach you in that research center. We guide you, we teach you, we educate you, we teach you to fish, not just give you the fish. And that's the bottom line as well. All right, so that's what we have right now. Doing a quick check, you can see that the spiders kind of holding steady, still bullish consolidation. But again, as I said, there's not a lot of risk reward here either way in this trade. For the most part, it seems like the markets are on hold until we have the Thursday initial claims out. Tomorrow's a holiday, so the volume will be even lighter tomorrow as it's Veterans Day. So expect that to continue. All right, folks, have a wonderful rest of the day. Hope to see you in that webinar this weekend. It is going to be clutch. In addition, you want to join the research center as well as the chat room if you have any time during the day. It's the best deal out there, $199 a month, and basically even if you're in there an hour a day for a month, think about the consulting value just by asking questions and listening to live play-by-play and education and teaching and all that stuff inclusive. All right, we'll talk to you soon. Take care, folks.